Imagine waking up tomorrow and your bank account is completely frozen, not hacked, not glitching, just gone, and there is nothing you can do about it. You think that cannot happen to you? It already happened to millions of people who thought the exact same thing 5 times in 5 different countries, and every single time the government called it necessary, called it temporary, and walked away without apologizing to anyone. This is not a conspiracy theory. This is how the banking system actually works, and once you understand it, you will never think about your money the same way again. Here is something nobody told you when you opened your bank account. The moment you deposit money, it is no longer legally yours. You have lent it to the bank. The bank now owes it back to you. You are a creditor. The bank is your borrower. And you had no idea that is what you signed up for. So where does your money actually go? The bank lends most of it out immediately. They keep only a tiny fraction in reserve. You deposit $1,000. The bank keeps 100. It lends out 900. That 900 gets deposited somewhere else and lent out again. Your original $1,000 ends up generating between $5,000 and $10,000 worth of loans floating around the system. The whole thing runs on one thing: trust. As long as everyone believes the money is there, everything works fine. The moment enough people stop believing that, the entire system can collapse in hours. Not days. Hours. It is called a bank run, and you do not need fraud or corruption to trigger one. You just need enough people to panic at the same time. Even a completely healthy bank can be destroyed by that pressure alone. So, here is the uncomfortable truth. The system is one giant confidence trick that works until it does not. And when it stops working, the people running it have a very clear priority order. You are not at the top of that list. Here is exactly what that looks like when it plays out in real life. America, 1933. The Great Depression is tearing the country apart. Banks are collapsing every single week. People are racing to pull their cash out before their bank becomes the next one to go under. The panic is spreading faster than anyone can control. President Roosevelt responds by declaring a national bank holiday. Every single bank in the United States closes at the same time. For 4 days, nobody can withdraw a single dollar anywhere in the country. Businesses cannot pay their workers. Families cannot buy food. The entire economy just stops. When the banks finally reopen, only the government-approved ones come back. The rest stay shut permanently. Millions of ordinary people lose their entire life savings with no warning, no appeal process, and no compensation of any kind. The government called it necessary. Nobody asked the people who lost everything whether they agreed. Argentina, 2001. The government has been making terrible decisions with borrowed money for years. Ordinary people can feel that something is deeply wrong, so they start converting their pesos into US dollars to protect themselves. It is a completely rational response to a government they no longer trust. The government panics. Overnight, they introduce something called the Corralito, which caps cash withdrawals at 250 pesos per week. It does not matter if you have millions saved. That is your limit. Then they go even further. They forcibly convert dollar accounts back into pesos at a brutal exchange rate. Savings that people had specifically kept in dollars to protect themselves lose approximately half their value in a single night. The middle class gets wiped out completely. The country goes through 5 presidents in 2 weeks. People take to the streets. The damage to ordinary families takes a generation to repair. Cyprus, 2013. Cyprus needs a bailout from the European Union. The EU agrees to provide it, but with one condition attached. Bank deposits exceeding 100,000 euros will be partially seized, not taxed, not borrowed, seized, taken directly out of private accounts to help fund the bailout. Businesses suddenly cannot pay their staff. Retirees watch pensions disappear that they spent their entire working lives building. Families cannot pay their children's university fees. None of these people had done a single thing wrong. They had not taken risks or made bad investments. They had simply kept their money in a bank. That was enough to make them a target when the system needed funding. Greece, 2015. The debt crisis reaches its peak and capital controls arrive overnight with no warning. ATM withdrawals are capped at 60 euros per day. Lines stretch around city blocks in 38-degree summer heat. Elderly people collapse while waiting outside to access their own money. Weddings get postponed. Medical procedures get delayed. Students drop out of university mid-semester because they cannot access funds to cover basic costs. 60 euros a day. It does not matter what your account balance says. That number on your screen becomes completely decorative. You can see it, you just cannot touch it. Lebanon 2019. Corruption had been quietly building inside the financial system for years before the full collapse finally hit. When it did, banks restricted withdrawals to tiny monthly amounts, regardless of what customers actually had saved. The situation deteriorated so badly and so quickly that people began walking into banks carrying weapons just to demand access to their own money that they had deposited themselves. That is not a dramatic exaggeration. That is what the complete breakdown of trust between a population and its financial system actually looks like on the ground. Nobody went to jail for any of it. Nobody got fired. Nobody stood in front of a camera and apologized to the people whose lives were destroyed. The governments called it a crisis. Then they moved on. And here's the part that should make you stop and think very carefully. Every single one of those crises followed the exact same script. Withdrawals restricted, accounts frozen, deposits devalued or seized outright, and every single time it happened, the government called it necessary and temporary and promised things would return to normal. That is not bad luck. That is not a coincidence. That is how the system is designed to respond when it comes under serious pressure. Many people feel protected by deposit insurance. In the United States, the FDIC insures accounts up to $250,000. In India, the DICGC covers up to 5 lakh rupees. That sounds like solid protection until you understand what those insurance funds actually cover in reality. Each fund holds only a small fraction of the total deposits sitting inside the system it is supposed to protect. It functions perfectly well when individual banks fail one at a time in normal conditions. It was never designed to handle a full systemic collapse where multiple institutions fail simultaneously. In a real mass crisis, that fund gets exhausted almost immediately. The actual primary function of deposit insurance is not to protect your money. It is to keep you calm enough that you do not trigger a bank run by trying to withdraw everything at once. It is a confidence management tool. Knowing that changes how you should think about it. The structural reality underneath all of this is straightforward. Governments need banks to collect taxes, control the money supply, and manage national debt. Banks need governments to provide bailouts and legal protection when things go wrong. You are the third party in that relationship. And when the other two need to protect themselves and their arrangement, they move first, every single time without exception. 5 completely separate historical events just demonstrated that independently across different decades and different continents. This is more relevant right now than it has ever been before. Everything in your financial life is digital. Your salary arrives digitally. Your bills leave digitally. Your savings exist as a number on a screen sitting behind systems that can be locked down before you wake up in the morning. Government can announce capital controls overnight. A policy decision made at midnight takes effect before you have your first coffee. The more cashless the world becomes, the greater the distance between you and the money you can actually use when the system decides you cannot have it. None of this means your bank is collapsing next week. What it means is that banking stability runs entirely on confidence, and confidence can disappear faster than any government institution can respond to or manage. Spread your exposure across different institutions and different forms of assets. Not everything you own should sit within a single system that a single government announcement can freeze overnight. This is not paranoia. This is exactly what the evidence across 5 real crises shows makes the difference between people who survive these events and people who lose everything. Keep some physical cash accessible at home, not a fortune, just enough to cover your basic needs for 2 to 3 weeks if digital payments stop functioning. The person in Greece who had cash at home when the €60 daily cap took effect was in a fundamentally different position from the person who had nothing outside the system. Non-bank assets exist for exactly this reason. Gold cannot be frozen with a software update. Real estate cannot be seized overnight, the way a bank account can be with a single policy announcement. These asset classes carry their own risks, but they exist outside the layer of the system that has already failed ordinary people 5 separate times. The single most important thing you can do is understand how this actually works before something happens to you personally. Lebanon was in 2019, 7 years ago. These were not people from a history book. These were ordinary working people with normal savings accounts who were completely certain their money was safe right up until the moment it was not. If this video changed how you think about your money, share it with one person who still believes their bank balance and their actual financial security are the same thing. They are not the same thing. And the people who learn that before a crisis hits are the ones who come out the other side. Subscribe now. See you in the next video. History does not just repeat, it rhymes. So make sure you're listening for the next Money Echoes. Subscribe, and I will see you in the next one.